Saudi Arabia's bold move, shaking up the global financial landscape. Saudi Arabia's departure from using the US dollar in global trade marks a significant shift in the international financial landscape. This decision signals a move towards diversification and a potential challenge to the long-standing dominance of the petrodollar system. Historically, the petrodollar system has been crucial for global trade, where oil transactions are predominantly conducted in US dollars. This arrangement has reinforced the dollar's position as the world's reserve currency and strengthened US-Saudi economic ties. Saudi Arabia's motivations for abandoning the US dollar include reducing dependency on a single currency, mitigating risks associated with US economic policies, and seeking greater financial autonomy. This move aligns with broader geopolitical and economic strategies. Economic factors driving Saudi Arabia's decision encompass fluctuating oil prices, the need for economic diversification, and the desire to establish more resilient trade partnerships. Shifting away from the US dollar could provide more stability and growth opportunities. Politically, Saudi Arabia's move has far-reaching implications. It signals a potential realignment of alliances and a shift in power dynamics. This decision could impact US influence in the Middle East and alter existing geopolitical strategies. BRICS, an acronym for Brazil, Russia, India, China, and South Africa, plays a crucial role in the global financial landscape by representing emerging markets. These countries collectively aim to challenge Western-dominated financial systems and establish a multipolar economic order. The BRICS nations possess significant economic clout, accounting for a substantial portion of global GDP and trade. Their collaboration seeks to create alternative financial mechanisms, reducing reliance on traditional Western financial institutions and promoting economic sovereignty among member states. Saudi Arabia's growing economic ties with China highlight a strategic pivot towards the East. This shift is driven by shared interests in energy, infrastructure, and technology, underscoring the deepening economic interdependence between the two nations. As Saudi Arabia moves away from the US dollar, US-Saudi relations could face significant strain. This decision challenges long-standing financial and political alliances, potentially reshaping the dynamics of one of the world's most critical bilateral relationships. The geopolitical consequences of Saudi Arabia's decision are far-reaching. It signifies a shift in global power dynamics, encouraging other nations to explore alternative economic alliances and potentially leading to a more fragmented and competitive international landscape. Saudi Arabia's decision could cause immediate turbulence in the global oil market. Oil prices might become more volatile as trading shifts away from the US dollar. This could disrupt existing contracts and lead to fluctuating energy costs worldwide. This move could also reshape global oil pricing mechanisms. Traditional benchmarks like Brent crude might be influenced by new currencies, altering market dynamics. Countries may seek alternative pricing models, diversifying away from dollar-denominated transactions. The future of the petrodollar system now appears uncertain. As more nations explore non-dollar trade, the long-standing reliance on the US dollar for oil transactions could diminish. This shift might weaken the dollar's historical stronghold in global energy markets. The US dollar's role in the global economy faces challenges. Reduced dependence on the dollar for oil trade could impact its status as the world's primary reserve currency. This may lead to shifts in international financial stability and policy. Potential challenges to the US dollar's dominance are becoming evident. Nations are increasingly adopting alternative currencies for trade. This trend could erode the dollar's influence, prompting changes in global economic strategies and financial alliances. The rise of alternative currencies in global trade is a developing trend, driven by the desire for economic diversification and reduced dependence on the US dollar. Countries are exploring digital currencies and regional monetary systems to facilitate smoother international transactions. BRICS countries are actively preparing for a multipolar global order, seeking economic stability and political influence. By collaborating on financial systems and trade agreements, they aim to counterbalance the dominance of Western economies and foster mutual growth. The potential for a BRICS-led financial system is growing as these nations enhance their economic cooperation. By establishing alternative payment mechanisms and investment frameworks, BRICS can create a robust financial network, challenging the traditional Western-centric global economic model. Saudi Arabia's strategic shift towards BRICS alliances marks a significant departure from its historical alignment with Western powers. Strengthening ties with BRICS countries allows Saudi Arabia to diversify its economic partnerships and reduce vulnerability to U.S.-centric economic policy. The long-term economic impacts on the U.S. economy could be profound as Saudi Arabia and other nations pivot away from the dollar. Reduced demand for the U.S. dollar in global trade could challenge its status as the world's reserve currency. Saudi Arabia's decision to depart from the U.S. dollar in global trade could significantly alter international trade agreements. Nations may seek to renegotiate terms to accommodate new currencies and diversification strategies, potentially leading to more dynamic and multipolar trade relations. The move may also influence the future role of the International Monetary Fund. As countries diversify their reserve currencies, the IMF might need to adapt its policies and frameworks to ensure global financial stability and equitable support mechanisms. Global investment patterns could shift, with investors looking for opportunities in emerging markets and BRICS countries. This change could diminish the U.S. dollar's attractiveness as a safe haven asset, prompting a reevaluation of global investment portfolios. The U.S. dollar's status as the world's reserve currency is now under scrutiny. Saudi Arabia's shift could embolden other nations to explore alternative currencies, diminishing the dollar's dominance and reshaping the global monetary system. Saudi Arabia's decision sets a precedent that may influence other countries to follow suit. Observing its outcomes, nations might reconsider their reliance on the U.S. dollar, accelerating a broader transition to a more diversified global financial ecosystem. Other major economies will likely scrutinize Saudi Arabia's move away from the U.S. dollar, potentially prompting them to reassess their own currency strategies. This shift could lead to a more diversified global financial system, reducing reliance on any single currency. Potential reforms in global financial institutions might follow Saudi Arabia's decision, focusing on creating a more balanced and inclusive framework. These changes could aim to accommodate the increasing influence of emerging markets and alternative currencies, ensuring fairer representation and stability. Technology and digital currencies will play a crucial role in this evolving financial landscape. Innovations in blockchain and fintech could facilitate smoother transitions between currencies, enhance transparency, and reduce transaction costs, further challenging the dominance of traditional financial systems. Predictions for the next decade suggest a competitive landscape between the U.S. dollar and BRICS currencies. While the dollar's historical dominance provides it with resilience, the growing economic clout of BRICS nations could shift the balance of power, leading to a multipolar currency war. As the global financial landscape evolves, the balance of power might shift towards a more decentralized system. Saudi Arabia's move could accelerate this transition, encouraging other nations to explore alternative alliances and financial frameworks, ultimately reshaping global trade dynamics.